Well, good morning, everyone. So I'm here to talk more about security tokens. And I think, let's say, the previous speaker, Matthew, has already spoken a bit about the changes that are happening in and around ICOs. And my talk will be a bit further about exploring where do we think that's going and the implications for capital markets in general. And it will touch all of you in the room. So I think it's important to know about that. So I'm hoping to speak about half of the time, and then half of the time also have time just to be able to interact with you and answer questions. I think that's the most useful use of our time. So let's see if I can make this work. So first a bit about Galaxy Digital, which is the firm that I work for. We are a company based out of New York. We have 4 divisions. We are basically a merchant bank for the cryptocurrency and blockchain industry. We do trading in cryptocurrencies. We do over-the-counter trading for institutions and family offices that want to trade large volumes in Bitcoin or any other coin that there is. We do asset management. So for institutions, pension funds, other organizations that want an organization to manage their cryptocurrencies. We do private equity and venture capital type investing in startups, and also follow-up investing in further stage companies in the space. And then finally, we have an advisory arm. So I'm part of the advisory, and our advisory does 2 types of things. So one is working with Fortune 500 companies in terms of helping them figure out what to do with blockchain and what to do with tokens. And the other part is working with any company that wants to raise capital into this market. So we're creating a general service merchant bank for the space. Primarily focused on institutions, but definitely open to working with whoever wants further help in this space. Where we come from, Mike Novogratz, our CEO, he was a former partner at Goldman Sachs and at Fortress, and he amassed quite a bit of crypto wealth, primarily during 2017 when everything went up. And he figured he wanted to do something with this that had a bigger impact in the world. So he decided to create the Goldman Sachs of crypto, as he calls it himself, and that's when he decided to form Galaxy Digital. As of 1st of August, we're now publicly traded on the Toronto Stock Exchange. So yeah, and now about 80 people with offices in New York, London, Hong Kong, Tokyo, Vancouver, and now opening up in Zurich. Anything else? Yeah, I think that's sort of the overview. So again, yeah, we're an organization that helps companies figure out how to use tokens and tokenized securities to advance in the space, and definitely working with the user experience of the investor, on the one hand with the technology that we create internally and outward facing, and that's also what we obviously offer to our clients to be both compliant as well as allow for a good way of raising capital across the world. So I can't even, I'm just going to put on my glasses because I can't even read my own slides. So yeah, what is a security token? Well, when we're talking about cryptocurrencies and tokens, we're always talking about a cryptographic token, something that has a representation of one sort. So that is something that can be, that is ledged on a blockchain and can be transacted using a blockchain ledger that our first speaker mentioned. So what can you do with it? You can basically represent anything in a digital token as long as you can find a proper way to link the digital token to whatever the physical representation is or whatever it represents. So Matthew already spoke a bit about that you can use shares and other instruments and have them represented as tokens, and that governments are slowly starting to accept that you do that. Several jurisdictions are doing that. I think our view is that we can, any kind of fund unit or representation of real estate or a revenue stream or any kind of other underlying asset can be tokenized in one way, shape or form, but will require a bit of thinking to be done. So why we believe it's revolutionary is because the token itself is a programmatic thing. So you can program it to do almost anything. So anything that you can capture in if this then that rules, you can program into your token, which is why it's so great. So you're basically leaving behind paper share certificates and now creating a digital token that that can do more things and be transacted more fluidly. So there's also some risks, in my view, involved in that. It also allows you to create derivatives that are included in the same token. So I do believe that we will see, once the full financial engineering implications of tokens are known, that we can become even more creative in how we do our derivatives and development of derivatives. So how is it different from an ICO? So I think the main difference is in how the economics are structured. So ICOs are something that the idea is that you create a deflationary economics. So you fix the total number of tokens that are out there, and you sell those to early investors, and then you allow the ecosystem to grow. And because the total number of tokens is finite, you expect the value of the token to go up. So I mean, in theory, it's very elegant. It's very elegant to be able to have all stakeholders be aligned in the same ecosystem and support it, and then all benefit from this ecosystem growing. There's a couple of issues with it. I think the main issue has been that, and that's what we've seen in 2017, is speculation makes it really, really hard to maintain that ecosystem. So anything that's deflationary will have people coming in generally and speculate on the basis of it going up, and they will basically not be participants in the ecosystem. So we're seeing a bit of evolution in thinking. So it's very much about thinking, when we're thinking about utility tokens and ICOs, we have to think more and more about how can we stop or how can we harness speculation, or what do we do with that. So the main other difference between utility tokens and security tokens is just how they're classified by regulators, obviously. So within security tokens, you'll have to program those resale restrictions that Matthew also mentioned to be able to make sure that it's compliant. So it's very much also about eliminating a lot of the regulatory risk. Yeah, so what will it do to capital markets? So we already see that some of the major stock exchanges are moving on to do more with cryptographic tokens. I believe there's almost no major stock exchange in the world that hasn't said something about doing on blockchain or tokens. So this is something that is happening. I think it is trying to take a lot of what we've learned with initial coin offerings that are utility tokens and the advantages that you have there in terms of governance and in terms of participation, and applying them into a security token world where you can streamline compliance using a platform, where you can have multiple jurisdictions basically offering into this, or an issuer offering into multiple jurisdictions in a compliant manner, and reduce the administrative burden. So the idea is to create a more seamless experience over the long run for issuers. So I think there are still two main problems to solve. One is, if we see security tokens so far, they're all relatively illiquid, more illiquid than the higher cryptocurrencies. So a lot of infrastructure is being built by what they call alternative trading systems, but also software infrastructure that links those alternative trading systems and other trading infrastructure. And I also do believe that the traditional stock markets will at some point get into this business, and then we might see a lot more liquidity coming. And the other one is still regulatory environment. So I think, although there are some signs that regulators might not care whether it's a digital share certificate or a paper share certificate, this will still require a lot of inertia to get through over probably the next 1 to 3 years in terms of getting regulators on board and then signing off on these offerings. But with those two problems solved, I think we will see a lot of this security token offerings happening over the next while. So that's what I had in terms of content. So with that, I would just wanted to open the floor and ask for questions and insights and thoughts and etc. Anyone? Go ahead.
So you mentioned a little bit about derivatives and this might evolve over the course of time. Could you go into a little bit more depth on some of the specific types of products or services related to derivatives?
Yeah. So the question is, how would I expect derivatives and based on tokens to expand the whole space of derivatives? Well, I think it sort of falls apart into two things. So one is that you can create more different financial instruments with tokens than you could with paper share certificates easier. So now you can choose to tokenize equity, but you can also choose to tokenize something that has to do with the revenue stream or the profit stream, or any other underlying assets that you might think of. It can be equity, but it can also be debt, and it can be way more convertible from one to the other because it is all done programmatically or even in a governance structure that allows you to change it. So the conversions between one type of instrument and the other become way more fluid and way more simple to effectuate. And then on top of that, you can transact the same token using any kind of futures contract or other contracts that you can build out on top of it. So it becomes way more easier to do more with that same token. So I'd say the two levels. So one, there's going to be more things that are going to be digital securities because there's just more options for it. And then secondly, derivatives that can then be built out on top of that more seamlessly. Did you have a question?
Well, I just, it's the 10th anniversary of the crash, pretty much, and that was all down to derivatives. And you're here talking about increased creativity for derivatives as a good thing.
No, I'm not saying it's a good thing. I'm not.
You don't think it's okay?
Well, I'm just saying this is, to me, just knowing humanity, this is a fact. So I'm not going to, it's something that's.
Stopping that because, if I'm buying a cryptocurrency and there are the if-then conditions applied to it, am I going to have to read every cryptocurrency to know exactly what I'm getting? And I could be buying something that I really, really don't want. We already don't read terms and conditions on the apps that we use.
Yeah.
We're going to have to start reading terms and conditions on money.
Yeah, and I think that's a very good point. So I think the user experience of how this investment flow goes is going to be hugely important. So I already believe that current disclosure is already broken. Like if we do an offering memorandum today for a prospectus filing, how many of you that have participated in an IPO round have actually read the whole prospectus filing? Can I have some hands here? Well, we have 2 in the room. That's quite a lot already. So I'd say, the way in which information is presented is more to cover the issuer rather than to inform the investor. So I think we should be changing it. And for me, it's a user interface issue. It's about how do we communicate with the investor and how do we disclose in a way that's relevant to the investor. So some jurisdictions are already further ahead on that, requiring like a 2-pager that has the primary risk elements and the primary things that have to be disclosed in terms of what might happen or might not happen to the instrument that you're buying. So I think we should be, and some jurisdictions are already alive to that, disclosing things differently and more clearly. So yes, it will happen that that it might get more complex for you, but you know what? It's already complex. Yeah, because you should be understanding the governance structure of each of the public entities in which you've invested in, like their voting and how they hire and fire the CEO and all that kind of stuff, right? So I think by creating more platforms and investing on a platform, we also have an opportunity to interact with an investor in a more interactive way. Like we can ask you questions about what you understand, what your risk appetite is, and all those other things. So it's about know your customer can be elevated to a new level. So I don't want to say it's not a risk. It is, but there's also an opportunity because we are digitizing everything and interacting more on a platform basis that we can also solve some of it, what's already broken today. So that's an assumption that these tokens would be traded on a secondary market without approvals peer-to-peer, and I don't think that will be the case. So if we look at today, those things that are classified as security tokens, it can only be traded on approved secondary markets. So that's why I'm saying those are the alternative trading systems that I mentioned, and so I believe that also the current public stock markets will play a role. So those companies will have to do the same disclosure as today those companies would have to do if they want to sell to the wider public. Well, depending on what token it is, but I would say probably yes. There is some gray area there. I need to round off, so yeah.